Welcome to Big Picture Trading. All right, guys, welcome back. Another episode of Chart Talk. We're going to jump right into it. First thing we got, this gold chart has got to be the craziest gold chart I've seen in as long as I can remember. We can just see, I kind of drew out here all the flags. We have this macro flag going back from 2020 to 2024, 4-year consolidation under 200. You see the breakout, you get the next flag, breakout higher, next flag, breakout higher, and then this last one, which has just been insane. And now again, as these bull flags continue to repeat themselves on the way up, eventually that pattern ceases to repeat itself again. So we have a macro breakout, 3 or 4 mini breakouts since. Insane, parabolic run. Again, this is the weekly chart here, but just insane for those holding gold. This is pretty, if we pull this up back a little bit more, let's see what the measure move would be. So just this pattern has already exceeded that measure move, and it's just kind of off to the races. So, keep holding on if you're in gold, but just know that when this trend changes, you have this very steep, and you can see, not even near the trend line. And I'm going to keep, drawing another one just to see how close we're getting to just like these parabolic moves. Still can't touch. And this is just vertical. This is a trend that if you can sustain that move, this is like tulip mania kind of bubbly moves where, it's going to keep climbing until it can keep climbing. But then eventually, once these trend lines start to get tested, you got to be careful. Not the time to chase. If you're in it, rock with it. Prior week low. If you're in it for a while ago, stop below the weekly low or prior week low. This is not the time where you want to give the name room after 100% run up in gold in the last 18 months. But phenomenal move if you're still in it. Moving on, again, we're going to jump right into the broad market. We got the Qs, inching higher, very clear breakout stage, very clear upward channel. Do not want to fight the trend, hovering marginally above the 5 EMA, which is good to see. But pretty much right now, any price action above, this 584, call it 580, anything above that area, completely normal price action. Just stick with it, stick with the trend, don't overthink it. Just enjoy this breakout market. And pretty much same story with the S&P. Same breakout stage. Again, I have this moat drawn, this mother of all trend lines. Let's zoom out for a moment. And we're going back many, many years here, back to almost 2018. And we can see this resistance area has been respected that entire time. We can see this whole run up here, can't break above it. We can see in 2022 when everything looked amazing at highs, tech was leading, couldn't get above it. We had that pretty rough pulling of a year, that base, and then, the rally that's happened since, pretty much since 2024, mini crash with the tariffs. But we have not seen a break above this resistance level since 2018. So would not really expect that to change. Would almost, this move here feels like 2022 again. Everything worked. Everything was super easy right here. We're kind of feeling that similar price action up here. You had AMD up 30% today. You had, Oklo and a lot of these other names up hundreds of percent, very quickly. So it's getting very similar to kind of the end of 2022 action that I'm seeing. So again, still very strong. We don't want to fight the trend. We don't want to anticipate, what can happen next. For right now, very clear breakout stage. We know the key resistance in the S&P is going to be around 700. And for right now, anything above this 650, normal price action. We have a mini little double bottom here. Anything north of 650 in S&P, completely fine, completely normal price action. So Don't overthink it until, we start to see a break here, break down on some volume, different sign, but for now, full steam ahead. Small caps have lagged pretty significantly broadly compared to the major indexes, but we can see this massive cup and handle going back to 2022, and we can see, again, I got to really zoom in here for you guys, the tiny little breakout. And this is a little baby guy, a little baby breakout so far, but finally pushing above those prior all-time highs that's held since 2022. So great to see this snapback move. It's great to see new all-time highs. It's good to see, this doing the same as the broad indexes. Same with the Dow. So we have, Qs putting in new all-time highs. We have Dow 30 putting in new all-time highs, S&P, and small caps. Mid caps lagging a little bit here, but we're seeing broadly most of these sectors are all hitting new highs. Great, great information to see. Moving on to some sectors, we got, just give me a moment. I'm going to skip through a couple. Again, utilities pushing new all-time highs here, pushing through the retest area. We don't really see that very often, especially with the sectors. They typically respect their prior resistance levels. But when everyone's kind of steamrolling into a sector, utilities, a flight to safety, again, a little bit of a red flag there, but pushed right through, breaking out higher. Great for the sector, not the best sign for the active trader. Now, telecom has been the only sector other than consumer staples. Look at staples for a moment. Consumer staples really has been the only big avoid in this rally. It broadly looks amazing, flagging at all-time highs. We've been keeping a close eye on this breakout through all-time highs here, but it just has not been able to break. And the more times you see a test of support, the more times support gets tested, the more often it's going to continue and break support. So this is very key when it comes to support buybacks. That first or second time when you're buying up off of support, you can get those pops. But if you can wait and get the exact price you want to buy, it's heading lower. And that's like in this consumer staples. If you want to buy 216, all you got to do is wait. When these times pushes down to 216, next day it's, $5, $6 higher. Those are those first, second moves where it's not obvious yet. Fifth, sixth, seventh, eighth, ninth time, extremely obvious, and the sellers are taking control. So consumer staples have been very weak lately, and seems like they're going to come back to kind of this tariff low and just have a much broader. I'm going to change this to red and just I'll delete this line as well. You can see the much broader flag. So most likely see the continuation down to support here. Probably see a little shake out of this, call 200, move above, pulls in, holds above 200. And then we have a big 10% range for this to eventually break out down the road. But the point of this, staples being weak, telecom, which has been very strong in this rally, one of the sectors that was hitting new all-time highs first. We can see the very clear breakout stage it stayed in almost perfectly since March, but now we're starting to see it break out of that channel and test support. Not what you really want to see. So we're seeing two weak sectors right now, which is consumer staples and telecom very marginally. This could just be a new flag forming, new consolidation pattern, but it did break this stage of breakout, and we want to see it get back up into this range as quickly as possible. If it gets back in here, then you just, this is the new trend line, but for now, it has broken the trend line. With some of the stronger sectors, telecom still, inching to new highs, industrials pushing through all-time highs again. Very quiet action that we've seen from these all-time high breakouts. Industrials breaks all-time highs, kind of two inside days here. No real follow through, no big bullish engulfing candles. Now, on the flip side, we have this healthcare, which we've been talking about for a few weeks, that has finally broken out with some real, momentum here. We can see big bullish engulfing candles, massive pop out of this base, which is exactly what we want to see. And it's getting very close to this resistance area. If we zoom out, we can see all of, late 2024, healthcare could not get above this 275. So we had this massive breakout through the stage one base, which we were talking about for a couple weeks. Very quick action back up into the resistance area. And now we have a much broader, bigger base that's forming. So this is what happens when you have these sectors that lag. Eventually they try to play catch up, but it has to just battle with all these prior resistance areas compared to sectors or names that are all-time highs. They tend to drift much higher when you get through those highs. And that's why we focus on those names more specifically. But sector-wise, again, a lot of strength out there. We can see consumer discretionary retesting all time high from end of 2024. Significant pulling, gets right back up there, but we're seeing resistance at that level. Very similar. Again, Apple's not in this sector, but a lot of people have been talking about Apple lately, and it's the same thing. This was the all-time high. I'll change it to weekly so it's easier for you guys watching this. Apple has an all-time high here, end of 2024, pulls in, climbs back up, and it's stalling out here, creating resistance. If you think about it, if you bought Apple a year ago at 250, and you sat through it through the tariff war, it drops to 170, you're down 20, 30%, you're back to break even now. This is the time where most people are going to say, I'm going to ring the register and get my money back and go somewhere else. And that's why we're seeing resistance getting created here. And it looks like a tight little flag here, but I wouldn't expect any significant break through this level. It would, if there's any break, it's going to be like the Nvidia break, which again, we're talking about this lackluster breakout market because the market just very exhausted. We're getting these very tiny pullbacks, 1%, 0.5% pullbacks. It's hard for the market to really rocket off those little pullbacks because there's nothing there. There's no meat in that pullback. And that's what we saw even with Nvidia these past weeks. This was the best, semi chart out there and breaks all-time highs and goes, $3-4 and it's right back to the breakout level. And that's just what we're seeing from the sectors. We're seeing that from the index. We're just not seeing that momentum here at highs because a lot of these names have came so far so quickly that the buyers aren't really there pushing these things higher. So going into the week, it's been a much smaller watch list. Again, I've been keeping a close eye on this Roku. Let me zoom out for a moment. Going back a couple of years now, so Roku has not really been able to get above this 105 area. Now you can see 2022, 2024, 2025, 20, every year cannot get above this area. And we're starting to see the buyers kind of, come back in and hold this name up. We can see the last time, back in March, gaps up on earnings, the 105 sellers there, name gets cracked, 50% drop, climbs all the way back up, and you're seeing just, visually a lot of red candles here. As simple as we're going to explain this, a lot of red candles, we're seeing more green candles. As simple as that. A lot of sellers, a little bit more buyers here. So it's been tough to be perfect with these base breaks because this is a macro pattern. It's been setting up for 1,000 days here. So to perfectly buy 105 or 104, 103, it's been a little bit trickier of a trade. You kind of had to be in this to, in this from 100 where you're giving it versus 90 to make, the move to 150, but still setting up really earnings most likely would be the catalyst to really push it out of here. But for now, if you're in it, it looks great. But tactically trying to get into it at this level right here, you have to be perfect. And that can be frustrating where you buy it at 105, you get stopped out. A month later, it's at 120. That's the tricky part. But macro wise, looks great. And then moving on to some names. Again, we've been sitting in this Tesla from this 360. Haven't really done much with it. Again, just still, doing its thing. Again, we have this magnet at this retest. Talking about Apple at the retest, talking about consumer discretionaries at the retest. We should expect resistance at this retest. Tesla can come out with whatever it wants to come out with this week. Could be all amazing news. That's great. We're in it. We hope it goes higher. But retests are retests. Anyone who's been in this name since last year, who bought it, at these highs, is going to want to sell it when it gets back to those highs. Same with anyone who's bought it all year, up 100%, up 80%, up 70%. People are going to want to ring that register at a very clear and obvious point, which is this 490, 500 in Tesla. So still expected to go higher, but if we get that run up into that area this week, could be a time to, take a little bit off. Moving on, we got this SHEL. Again, we've been talking about this name for, about a week or two now. Massive pattern here. Again, this is a weekly. Let me go back to a monthly. It's 3 months. Give me a second. We got a monthly chart here, and pull this back. We can see, going back to financial crisis days, that this 74 has been resistance for nearly 20 years. We can see it breaks, gets a nice pop to 90. We could see in 2012, again, gets back up there again, a little break, can't get above it. 2013, you can see very clear breakout. And then since then, this is what 2018 can't get above it, 2024 can't get above it, 2025 can't get above it. But the one thing we're seeing differently compared to all these other times is how tight it has gotten since. All these other times, it goes and it gets smoked as quick as possible. There's no real tight consolidation. This monthly candle here, low is 65, 75, big ranges, gets to 74, down to 60. And now these last few months, this thing can't break below 70. And even for myself, my buddy Victor, we actually had a really great buy in it early this week, and we kind of fudged it up. We saw this gap down, very tight inside dig, and this is like a $2 range. At the time, Shell gapped down to 70 at 50-cent intraday range. We bought through the inside day high up through 71.50, 50 cents risk, and just kind of got chopped in it over watching it on this day, and pretty much got out of it break even. And since then, it's rocketed higher. So that's, we have this macro pattern setting up for 7 years, and we got a really great entry, but we kind of chopped ourselves out of it, kind of watching it too much. But today we had to buy that breakout. We had to buy 74. And the key thing we really want to see here is we want to see a close tomorrow above 74.5. That is the key area. I'm going to zoom back, and we're going to have to go back quite a bit. But those were those prior pivot highs. Again, it's going to be very hard for you to see this, watching this on social media, but these highs were 74.50 over here. So that's the key level we want to see break. And right now, 70 is the app. This is a weekly chart, super tight, and $4 risk. We'll see where this thing goes. So that's the big focus for these names. Some quick good and bad trade, really slowed it down last week or two. Again, we haven't really seen the breakout action. NVIDIA was one of the best charts, didn't get much follow through. We haven't been seeing a lot of follow through from the sectors, just these little kind of tiny inches higher. So been letting Tesla do its thing. And this week, the SHEL, but last week, bought this car through this base break here, and we needed to see that break above 168 to really confirm this base breakout. And we just didn't get it. We got out basically break even. I'm going to zoom in some more. We pretty much bought this day, got the run to 168. We needed to see that follow through kind of the next 2 days. We didn't get that. This is what we want to see. The break and close above this area. We got a little bit before it. But again, visually, a lot of green candles. Looks great. Since a lot of sellers. So We got out of this thing basically break even. I think I lost like 0.5%, got shooken out right here. And since then, it's clearly showed us it wasn't ready. Break even trade, worst trade of the week last week, names down, almost 10%. Since then, we lost nothing in it. Can easily buy this thing back. But for now, we know, 167, 168 really is the key spot. So moving on to a couple of alerts. Again, NVIDIA, this was kind of the big one from last week, but just a dud. It was like a firework that doesn't go off. All-time high breakout. Semis have been on fire, and we're starting to see, kind of the bubbly moves running its course. So we talked before about the moat, the mother of all trend lines for the index, and what do we see here with semis? This is going back to 2020. This trend line, let me zoom in a bit more so it's more visually appealing. Since 2020, resistance, I'm going to change this to red so it's just visually easier to follow along. Since 2020, the semiconductor sector has not been able to break above this upper end of the channel. Just like the major indexes, this has been resistance, this has been the time to sell. And when everyone's flipping out and afraid, it's been the time to buy. The bottom of 2022, this was a very tough time back then. That was the best time to buy. Tariff war, best time to buy. This was the time to buy. And up here, this was the time to sell. And we're seeing this massive run up, tight little flag. This is, month and a half up into resistance. And this is the first tiny little red candle that we're seeing compared to this last month and a half of just bullish action. So these are things when these sectors are at highs, you have stocks like AMD gapping up with anything related to AI. It seems the run's going to continue, but these charts don't lie. This has not broken in many years, and you get these bubbly big moves at the end of these runs within, the respective sector. So you're seeing NVIDIA, the biggest player in the game, nothing breakout. AMD, congrats everyone in AMD. But this is a retest again. We talked about the retest in Apple. We talked about retesting consumer discretionaries. Here's the retest. Really no shock that people sold this. Anyone who had AMD long, even from all-time highs back in March 2024, you walk in today, things up 35%, perfect time to ring the register. So not a big shock that this thing bearish engulfing into this level. It's not like this AI news perfectly values AMD at, $227 a share. It's the market dictates that. So we see resistance here, with that news, should expect a massive new flag to form, 230. We'll see how far this thing pulls in. Again, a lot of gaps like to get filled. Not going to say this is going to fill it back to 170. That's, pretty significant sell-off, but expect very wide action from AMD because it has to swallow up this whole move and then set up for that next leg. This is almost like the expectation with Tesla at 500. Like we should expect that run up. We shouldn't expect massive breakthrough Tesla through 500, in at that first attempt, which is like we saw with AMD, like we're seeing with Apple. We're seeing a lot of this action where the names are getting ahead of themselves, but they're not having the follow through to continue. So that's where with these semis, great news for the name, but these charts, this isn't like a in 5 minute chart that we're showing. This is a weekly chart going back 5 years and selling come into play. Even for my biggest, holding, Baba, same thing. This upper channel looks great. And all year, this area has been resistance. It runs up, can't break this level, massive run up again, still can't break this level. So these chart patterns, gets just up there, it could still easily push, a little bit higher, but these are the areas where if you were in this thing from 120, end of August and you caught this rally, these are the times during the register. Again, I've been in it for a long time, so it's a little bit of a different trade for me. But when you're seeing these major resistance levels getting tested, when everyone is super excited or bullish about that sector or name, that's the time to, lock some in. So moving on, we're going to go on a couple quick alerts, see how they're doing. MLM, again, blue sky breakout. Let me zoom out a bit. So MLM has been setting up for, a year and a half, couldn't break above this 626 level. And again, we're talking about these lackluster breakouts. All-time high breakouts, very tight consolidation, breaks the level, no problem. Inches higher, but not much follow through. It's 10 points higher. It's 2% higher since the alert fired off. Great, but not a massive Oklo kind of move. PII, Polaris for all of our ATV fans. Nice base here that we were calling out. Finally breaks out through that 60, and it's inching 5% higher, almost 10%. When it gets 66, so it's inching. It's doing good. Nothing too crazy there, but at this point, probably can raise that stop if you're in it to break even, tighten that risk up, and then just look for that, first kick, at 66, 10% gain.
Welcome to Big Picture Trading. We aim to teach you how to successfully swing trade in the markets while working 9 to 5. We've put together a program that we can teach you over a decade's worth of knowledge over the next 60 days at no cost. Sometimes something like this can happen. Now, obviously, we don't plan to crash or invest, but the reality is when you know what you're doing, that can happen. If you'd like to learn more of how we can help you avoid mistakes like this one here, simply click the link below, schedule a call, and be happy to help.
Next, we have this GLW. Again, what's strong continues to get stronger. This tight flag here, and that alert through 66, retest 66, never touches it, off to the races. For now, the current pivot low is at 76. Still looks phenomenal. You're still in it. Congrats to those holding it. Looks great. And also this KNSA. Pharma names have been strong as well. Pull up the pharma sector for a moment, but then the sector as well could not break above these all-time highs all last year. Gets back up there again. We see, we had a alert for the biotech breakout. There's 135, but we can see this parabolic run up here and breaks out, new 52-week highs, but kind of lackluster. Very tight inside, little inside day. Most likely fades back in this range. So, we're just seeing, a little bit of exuberance in the markets. If you're in the names and you're getting the follow through, amazing, but it's been very selective from the entry standpoint since most of the names have really gotten away from the real entry. So KNSA, we had that alert through 34. It's grinded higher very nicely so far. Right now, really, this is the pivot low or the out versus 35. Eventually, if this name breaks out higher through this little flag here, once we get a close of this 39, that's when this new stop can be raised to here. But we need to see the confirmation of that breakout before we raise that stop. So just some alerts that have been working very nicely. We're going to jump into some member ideas. Again, we talked about this AMD. Our fellow track buddy Tim called this out through this, I believe it was 164. And, we caught the, big AI news. A couple of guys were in it today. Again, taking profits off the open. That was the move. Again, for now, if you're still in it, you're going to have to weather the pull in and then just be prepared down the road for that all-time high breakout through through 226. Down the road looks amazing. Right now, again, not the time to be chasing into AMD. Let it settle out and wait to buy this all-time high breakout whenever that time comes. Probably, I would say, in early 2026 at the soonest. I wouldn't expect this. I wouldn't expect to see AMD north of 226 anytime going into the end of the year. ADSK is another one of Tim's ideas. Again, we got a weekly chart here. Zoom out, you can see, this is all-time high breakout. Really, 346 all-time high breakout. So blue-ish skies, blue sky breakout is when a stock is taking out its all-time highs. Market's been pretty much in a blue sky breakout, past few months. And bluish, it's pretty close, but we had this very tight flag forming under this level. So right now it's waiting for that break above 330 versus this 310-ish. Again, when the real entry comes into play, the stop's probably going to be this 320. So looks very good. Just need the momentum through that 330 through 330 and that stop versus 320 for now. But again, looks amazing. We have CRSP, massive base, similar base to this Roku. Again, Roku and CRSP nowhere close to similar names, but chart-wise, 1,000+ day base. Can't really break 70, can't break 70. Can see very clear base. Only tricky part is that the risk is super wide still. The real pivot low here is at 50. Very tough to be looking to buy this 70 this week. This name really needs to, pull in, flag out. The real pivot right now is 50. Really need to see this thing, kind of hold up here. Let me zoom in some more. Really want to see it kind of flag out tighter here. And then again, very clear, still a seller at this level. Just like we saw at AMD, opens a level, sells off, sellers are there. So we want to see this candle through this 70 when that time comes. But needs to set up more. Still to, 40% run up last month or so. It's tough to be looking for the entry just yet. All right, next we have Dick's Sporting Goods. Again, talking about blue-ish sky breakouts. This is going to be technically the blue sky, but we can see that this 240 has been resistance, was resistance back in last August. We can see set up, broke out, and failed. And now we're seeing it start to develop again. So probably needs a little bit more time to really set up here, but waiting for 240 is going to be the key confirmation of that break. Williams Sonoma, again, setting up here. It's been getting pretty tight into support. Maybe it has to shake out this area first. Really want to wait for the all-time high break here, but can see, the entry through 204. But I would probably let this thing shake out this area here and really just again, if you're buying this name here, the AMD, Apple, a lot of these retest examples, this area is going to be resistance. And this is why a lot of these setups, which it still most likely will get here, that's your kind of best case upside. And that's why a lot of these trades that are setting up here are passes, not that they're not going to trade higher, but to buy it at 220, risk it versus 190, you're giving it $10 risk. And realistically, it's going to run back to 220 and have sellers here anyways. Your best case 2-to-1 risk reward, and that's not even the bare minimum of a trade. So that's why some of these trades here are going to be passes, just from a risk reward standpoint, and realistically where the name is going to go in the short term. I'd rather let it retest 220, set up again, and in 6 months you're buying that 220 breakout like here, and you get that quick move from 220 to 270 in a month or so. So let's keep moving on. Next, we got this Datadog. Same thing. Talking about retest. This, I believe, I think Adrian was in, but he was in from much lower. So again, all-time recent high. I believe Adrian was buying through this 140-ish area. This is again the retest. Time to ring the register or raise your stop below that little pivot. So no entry here. If you're already in it from this entry, stick with it, raise stops, take a little profits, but not really the entry. EDU, again, Chinese names have been on fire. Baba, Baidu. Baba's up 100% since July, or I take that back, 87% since that like July bottom. Baidu up just insanely, like gold recently, just vertical, about 50% in, month and a half-ish. So China names definitely been on fire. EDU we're seeing a very similar base here. So base has been setting up for a year. Look at this Baidu base. Baidu is setting up probably a little longer, about a year and a half under this base. This is the base we're talking about. Really, this is the base. Those are just kind of some shakeouts, but very tight horizontal price action. A year later, it goes. EDU, very similar base here, just not as long. It's been 10 months or so, and this base has not traded north of $56 a share. We have multiple attempts. One attempt, two, three, four attempts at 56. More attempts at resistance. Increases likelihood of follow through to the upside. And we're starting to see the buyer step up. Summertime, name was at sport, looked like it was dead. Recently, buyers stepped up from 40 to 50. So if this name can pull in, put in a higher pivot low above 50, and turn up back towards the 56, that could show us the signs. Now again, earnings are coming up pretty soon. Maybe that's the catalyst. Maybe it takes us straight away, but 56 key level in that breakout. And again, we see what these names can do when they break these macro bases. Again, we touched on Apple. The key thing is this is the retest area. Again, I see a lot of people on like Twitter talking about this Apple flag, but this is the retest. Would not expect massive breakout here. If there is a breakout through this 260, expect like Nvidia, flirts a couple, percent or two higher, kind of fades back in, and then kind of falls off everyone's radar. That would be my expectation. SoFi is one of Tom's top ideas. And this is one of these IPO all-time high breakouts. So going back to 2021, can see 27 was the all-time high. Recently, many years later, which this is very common with recent IPOs, this is why we typically avoid recent IPOs as much as we can because these names open. Maybe they get a pop, but for years until they kind of mature, they're usually kind of dead money trades until they can take out the initial IPO high run up. So if this thing gets a run up to 27, this is the key spot after years of when this name starts to wake back up. And you can look back, you look at Meta, you look at Tesla, you look at Snapchat, any of these names, really big names, all of them multi-year base, multi-year significant percentage pull in. They climb back to highs, through highs, extremely easy move to newer highs. So retest here. Again, I'm going to call this chart talk the retest lesson because that's what we keep hammering down in this one. SoFi runs up from $4 to 28, 400% run up this year, and magically finds a seller at all-time highs. It's this is just normal human behavior. If you bought this stock 5 years ago and you're still in it, and you finally can get up break even after being down 90%, you're going to sell. So we're seeing selling here, and that's just this crowd of people that were buying this SoFi. And if they stuck with it, they're right here selling it. This is this crowd. Once this crowd is gone and this thing starts to tighten up more, the next subsequent attempt through that level versus that recent pivot low will have a much higher odds of working and pushing higher. There's no reason why this thing can't be at 50 or 75 a year from now. We just need to clear this area, and we just need to get rid of these people who are just going to be taking profits here. So give it the time, keep those alerts set. We have these alerts set for the key levels. And when it's ready, we'll be involved for those quick IPO high breakouts higher. So for now, it's just not as ready, but just give it time. Oklo, again, insane move, significant pull in. And again, another retest. All-time high, pulls in $40, $30, 2 days, gets right back to highs. If you were in this name and you could have sold 140, you see it pull in 20, 30%, and you can sell it back at that same price again, you're going to sell. So massive flag starting to form here. If you're in it still, really probably a stop under 100. Again, this 106 is the pivot here, but this name is so wild of a name. Psychological level of 100 probably acts as support. So you got a 40% range of a flag here, which is insane to think about. If this name, for whatever reason, is not going to be the next, NKLA and go to zero a year from now, if it's going to actually hold up and trade higher, you're going to want to see this thing pull in, get nowhere close to 100, flag out probably between 120 and 140, and then eventually get that breakout through 140 down the road. But that's if it's going to continue higher. If this thing breaks below 100, this thing's dead money. It's going to be back at, $20 a year from now. So, if you're in it, the key spots. 100 if you're wrong, 140 if you're right. Anything in between is just going to, kind of be choppier. All right, next up we have the CDNS. This was one of Abby's ideas from a few weeks ago. Still basing out, excuse me, nicely here. Again, it's more of like a range-bound trade, similar if you've seen any of our Walmart trades. I'll pull it up in a moment, but very, pretty broad range, 20-point range here, getting pretty tight, and we're looking for the entry through 356 versus the low a day of 350. And realistically, the move of this trade, best case is, back to this resistance area, this 373, 73, 77. Like that's the trade here. Risking $6 to make 20. That's the trade. And just like, talk about a range bound trade, this Walmart, we've had two really good trades in it. We bought it through here, sold at 105, pulls back into this buyback zone. We buy through 96 versus 95, and then we sell it again. And again, we traded that range. Bought 100, sold 105, bought 97, sold 104, 105 again. And now it continues to be range bound. It can't get above 105. It can't even get, can't break 100. But when we see that push down, we buy it up again, and we keep trading that range till the breakout. So this, what was it? CDNS, just a quick range bound trade. Not expecting fireworks, but in this market where we're not seeing the macro breakouts going, we want to find some trades where we can be nimble and pick up a couple percent on tight risk. So those are, let's see what else. We got a couple more. These were some of Andrew's ideas. We have this TRMB. Looks a lot like this Cisco. I'll pull up Cisco in a moment, but definitely can see the little, flag, not little, the flag you're looking at. But again, this is like what I'm saying when you kind of want to wait for a bigger pattern. You get this break at 82, you're going to see resistance at 87. So you got to battle with that first, where, let it do that run. If you need to be involved, you're buying 82 versus 80. 2-1 best case. Again, for me, probably a pass. I would just wait for this 87 to set up down the road, but I can see what you're looking at. When I said it looks like Cisco, same. Let me get rid of this horizontal line. Cisco had this kind of pattern a few weeks ago. Let's go like this. This TRMB, we can see the pattern tightening up. And then Cisco, we see the same thing. But when that break goes, again, Cisco, again, similar chart pattern, goes a couple bucks back into the range. And what we now see is more clear horizontal resistance setting up through this 70. And that's like in that TRMS. I'd rather see this horizontal resistance form in time than buying that break where it's kind of 2-1 risk reward. Next up, we have AMBA. If we see a massive base here, going back a couple of years. So going back to 2020, thing can't break below 40. Last 2 years, pretty much range bound, really this 90, let's switch to weekly. Really, this 90/100 area are the two key spots. So you got 90, very clear resistance, and this 100, very big resistance. When you get, or if this name breaks and closes above 100, this is probably when you get the faster move. Probably not all the way back to all-time highs, but 170, 200, even this high. But it's going to be this break. This break of 100 is going to be when this name really wakes up. So with these macro patterns, even like Roku before, the macro patterns you want to wait for the macro levels. To sneak into it, this thing, can break above 90, climb to 100, and spend 6 months messing around between 100 and 70. And it'll just frustrate you. And then it's going to break 100, go to 150 in a month, and you're going to be wondering what happened. So, like this candle here, this massive sell off, whenever this thing breaks 100, expect a weekly candle like this. That's just like you can look up charts and you can almost, when you have these big bases and pull-ins, that pull-in, that run up back to highs typically mirrors that same aggressive sell-off. But this is going to come through the macro level. It's going to be very obvious through 100, through 90. I don't think it's going to be that explosive of a move. You're going to kind of see the move like we've seen so far. It doesn't just kind of chops around, but these big moves are going to be on key levels on some kind of catalyst. So it's AMBA, I would just wait for 100. CRNX, we see a breakout we were watching before. Thing breaks down, we avoided it. And as of late, I'm unsure what the news is on this. I can't tell you. Farmer names have definitely woken up. But super wide range. This is the new range. You got to expect 40 to break to the downside. Maybe fill this gap to some capacity, but this is a no trade for me. There's no real clean setup unless you're trying to buy up off of support to trade this range. I get that, but probably should expect a shakeout of 40 at some point. So moving on, we have this BK, which was one of Martin's, it was a great trade that he had. He bought through this 92. Initial stop was here below this pivot, which was great. Thing broke out, traded higher, and we can see a very similar channel to what the market has been doing. And again, when you're in this name since July, and he's in it for 2, 3 months now, eventually you got to take some profits. You got to rotate that money somewhere else. So he gets shaken out of some here. He gets shaken out some again here. I believe he's fully out of the trade, and he was asking what he could have done better, which again he did very well to trade, you know, from the start. The only thing is it didn't break this trend yet. We talk about don't fight the trend. It's been in this upward channel. Financial names have been very strong. Not really breaking out to an all-time highs, but they're kind of there. So financial's been strong. There hasn't been a real confirmation that this trade is over just yet. So did great with it, but with that last piece, like this piece was fine. If you sold 50% here, great. This is 10-to-1 risk reward from, the real stop. But this last stop out, it's always easier in hindsight. It's always easy to quarterback these trades after the fact. But waiting for the confirmation would probably have kept him in this last piece, you know, much higher. So we'll see if this, where this thing goes. We'll keep these lines drawn. Next week or two, we'll pop it and check out, see what BK is doing. But really, until there was a break of this area, I'll change the notes so we know for next week. We want to see how long this would have held for. Okay, moving on. A couple of ideas that Andrew was in from last week. This Oscar OSCR, I believe he was buying to that 20. Again, I typically avoid names that are sub $30. They just, in my opinion, are more frustrating to trade, or the risk tends to be much higher than the reward. But He's already up 10% in the name, which is great. And you have resistance coming up at this 23 level. So look to see how it reacts there and raise the stop versus the weekly pivot when it gets there. And this is why I say I try to avoid these names is you buy it perfectly at 20, you get a $3 move, that's amazing, but you got to give it $2 risk. So we're 1.5 to 1 risk reward. It's hard to hold the same at 20 to 40. You're going to buy it at 20, sell at 23, great. But if you're wrong and you're buying 20 and you're getting out 18, it's 10% loss. I'm not looking to lose 10% in any name, and let alone these cheaper names that it's until they really get above $30 a share, you don't really get those really easy moves where the risk is very tight, unless you're intraday trading these names, which is going to be kind of a disaster. So, integrate name. Just keep an eye on that 23 half area and just keep a close eye on the risk reward in the names that are sub $30. Same with this RCAT. Again, you know, buying 11, stop is 10, 10% risk. He's up $3 here. So $3 risk reward. He risked 10% to be up 30. We're seeing this area as the retest. You got to see how it reacts tomorrow. But if you're in it, hopefully low a day stop. But again, this is again why I avoid these cheaper names. I don't want to go into a trade where I'm risking 10% day one. And if this fails, I'm losing 10%. If I'm right, I'm making 30. I want to find the ones where I can risk 2% and find that, or 3% or 4%. But that's why I avoid the names that are sub $30 like the plague. You'll virtually never see me talk about a name that's under $30 a share for that reason, not the upside. It's I avoid them because of the downside, the real downside when they don't work. You bought the same at 15 here, this thing's at 8, you're down 50% in 1, 2, 3, 4, a week. You buy this name accidentally, you go on vacation, you come back, you're down 50%. That's a game I never want to be a part of. So that's the only reason why I avoid these cheaper names. And lastly, was this PHM Andrew was in from last week. Again, I believe he was buying this like 133 area, and just expect some resistance at this 142. At this point, hopefully you have a break even stop, or risking like $1 here versus that 132. So looks okay. Um, in time, probably got to run it back to 150 if it can clear that 142 pivot. But again, that's going to be all-time high. This is going to be the retest. It's going to be sellers there. So the key takeaway I would say from this chart talk, from going over a lot of these major names, a lot of these key names are running up towards major prior all-time highs. And that is often when resistance comes into play. Other than the only exception in these examples has been utilities. Utilities ran off the retest, broke out higher. There's always exceptions to the rule, but more often than not, this semi area is going to be the short-term high. I would not expect to see this at 400 in a couple of days. If it pulls in, could it get there in a couple of months? Sure. But this is going to act as resistance. First major retest of a prior all-time high. It's going to be met with resistance. And the action has been very slow and very, very tight. So you'll be very selective. You should be coming into the week, one or two main ideas, really focusing on those. It can almost promise you if you come in with 10 ideas in this kind of market, it's going to be way more work, way more frustration than any of the rewards. For myself, it's the SHEL for this week. We want to see that close above 74.50 tomorrow. If I don't see a candle like these tomorrow, and there's some little inside day or a little doji at highs, I'm out because it's not ready yet. This should be smoking this level tomorrow or the next day. So, rocking with the winner, Tesla, going to manage SHEL as best as I can. And, less is more. Wait for those big, big patterns, not the little okay setups. So thank you guys all for checking in, and I'll see you guys next week. God, taxes are so stressful. 1099s, brokerage statements, I don't even know what that is. Oh God, I gotta figure this out. I'm not gonna read this. If only I knew someone who did taxes. Scanner man, I'm stressed. I got 1099s, got brokerage statements. I got a menu from a Chinese food restaurant. I don't know what to do with that, but you gotta help me out, buddy.
Let me take a look. This is what you're worried about?
Stressed.
We'll handle this.
Thank God. What's it gonna cost me?
How much you make last year?
200 grand?
20% of that.
Oh God.
I'm kidding.
Now, obviously, we're not going to charge you 20%, but everyone's tax situation is different. So what we recommend is for you to email us a copy of your most recent tax return, and then my partner Skinner here is going to do a review of your tax return and educate you on the possible tax credits you could take advantage of in the new year. Once we've done that, then we can give you an accurate quote of what we feel it will cost to properly prepare your tax return in the new year. Welcome to Tax Experts. My name is Bennett. This is my partner Skender. Throughout the year, I'll be your main point of contact, helping you organize and collect your tax documents for the new year. Once we've collected all of them, I'll be passing you over to my partner Skender,
where I'll be preparing your income tax returns and working with you to maximize your deductions and credits for the year, and also offer planning services for years to come.